Governments like to control people, right? They like order, they like predictability, and they like control. So it makes sense for them to replace all the cash with digital coins that they programmed. But some governments are actually against the idea. If they destroy cash, all our money will be tracked, limited, and can even be deleted if we don't play by the rules. There are many authorities warning us against that. Even the Bank of England is skeptical about launching their own crypto coin to replace the British pound. There's a lot going on here, so let's take a step back and look at each piece of the puzzle. In the next 10 minutes, we're going to look at how it all started and where are things now. What are the major players on both sides, and what are they really fighting for? And what does all the data or the numbers say about this? So, as of January 2025, over 130 countries are exploring central bank digital currencies, or in short CBDCs. These 130 countries represent 98% of global GDP. Among them, 64 nations are in advanced stages, including development, pilot testing, or official launches. For instance, the Central Bank of Brazil has been developing their own digital currency called Drex. It was planned for the end of 2024, but it hasn't been released yet. In a nutshell, this is where we are today, but it can seem like too much to process. So before we get on to the major players in the conflict, we need to look back at how this all began. The concept of government-backed digital currencies can be traced back to the rise of cryptocurrencies like Bitcoin. It was introduced in 2009 as a decentralized alternative to traditional currencies. Decentralized just means that everyone in the world can access a copy of the ledger, which verifies the transactions on the network. The central bank digital currencies, for example, will not be decentralized and only the banks will have access to that ledger. So, when Bitcoin first came out, banks and governments didn't take it seriously. But as it grew in popularity and success, it got the attention of those who are in charge of our money. They saw both a challenge and an opportunity. In 2020, China led the way by testing its digital currency, the digital yuan. Soon, other countries like Sweden, the EU, and the US started exploring the idea too. Then COVID-19 hit, and governments realized people needed safe, contactless ways to pay. Because back then, all we cared about were contactless payment options. This turned the once theoretical idea of a central bank digital currency into a practical solution, one that also gave governments more control over money and the economy. And although, in places like China, nobody has a say in the policies, in the Western world there is debate. The regular folks like you and me don't want to be controlled, and there's organizations fighting for our rights. But before we get to that, let's explore who are some of the big players pushing the idea. Central banks are by far the ones with the most power, and the Chinese and European central banks are pushing for the adoption of digital currencies. Other major players are the International Monetary Fund and the Bank of International Settlements. In terms of adoption, the governments of Nigeria and the Bahamas have already launched their digital currencies, and they all have compelling arguments for why they are doing it. For one, CBDCs could make financial systems more efficient by cutting down the costs of printing, moving, and securing physical cash. They can also help more people access banking services, especially those who currently have limited or no access. From a regulatory perspective, CBDCs make it easier to track transactions, which helps fight crimes like money laundering and tax evasion. In the case of financial crises, central banks could use CBDCs to quickly deliver stimulus payments directly to people. All these arguments make CBDCs sound like a revolutionary tool, and this is precisely why many governments are eager to adopt them. But it's not all rainbows and butterflies. There are some serious common sense problems with these digital currencies, and there are many organizations trying to prevent that. US Republican lawmakers, like Senator Ted Cruz and Governor Ron DeSantis, have publicly opposed CBDCs. Banking lobbies, like the American Bankers Association, ABA, and the European Banking Federation, have raised issues with CBDC implementations. Privacy advocates and civil liberties organizations, such as the Cato Institute and the Electronic Frontier Foundation, are against the idea of programmable money. Even conservative religious organizations are against these digital currencies, sometimes linking them to apocalyptic or dystopian narratives. They all argue that CBDCs could lead to unprecedented levels of surveillance and control. Since digital transactions can be easily tracked, governments might monitor how people spend their money, raising concerns about privacy and personal freedom. Another major concern is the centralization of power. A government could, in theory, block someone's access to their money for any reason, such as suspected wrongdoing or political disagreements. There's also the risk of cybersecurity. A centralized digital currency system could become a prime target for hackers, potentially destabilizing entire economies. Lastly, they warn about the programmable nature of money. Central banks could set rules on how you spend your money or even make it expire, giving them unprecedented control over your finances. Both sides have sound arguments. Regardless of their hidden motivations, at least on paper, their arguments seem reasonable. But before we can make sense of all of it, we need to look at the current data that we have available. So, we are back to the question of where do we stand today. Here's some stats from the Atlantic Council CBDC tracker. As of January 2025, 130 countries, representing 98% of global GDP, are exploring CBDCs. 64 countries are in advanced stages, including launch, pilot, or development phases. China's digital yuan is the largest CBDC pilot globally. By June 2024, total transaction volume reached 7 trillion yuan across 17 provincial regions. Before we get to the rest of the data, there is something we need to understand. When it comes to CBDCs, there are two different types, retail and wholesale. Retail CBDCs are a digital version of cash designed for everyday use by the general public. They are used for direct instant payments without the need for banks or payment networks. They are accessible through mobile wallets. Governments can also use them to distribute benefits or stimulus payments efficiently. Wholesale CBDCs are specialized digital currencies used by banks and financial institutions for large-scale transactions, such as interbank transfers and cross-border payments. They operate behind the scenes to streamline the financial system. Wholesale CBDCs are not intended for public use, but are vital for improving the efficiency and stability of the financial infrastructure. Back to the data. The International Monetary Fund, or IMF, has reported that over 100 countries are exploring retail CBDC issuance, with several central banks having launched pilots or issued a CBDC. The Bank for International Settlements reports the following. A 2024 survey indicates that 93% of central banks are engaged in CBDC work. They anticipate that by 2030, there could be 15 retail and 9 wholesale CBDCs publicly circulating. The data from these organizations suggests that things are moving fast, but the public opinion varies widely. Critics point out that even countries like China, that now have a $7 trillion operational digital currency, have struggled to achieve widespread adoption. This suggests that while the technology may be ready, public trust is not. Economists are still unsure whether CBDCs will be used alongside cash or eventually replace it. The data so far doesn't provide a clear answer, leaving the future uncertain. One thing is certain though, we are living through a transformative period in monetary history. But there's one burning question that we all desperately want to know. What does the future hold? It seems that experts are divided. Optimists think that if handled carefully, CBDCs could bring a new era of faster, fairer economies, offering benefits like easier payments and financial access without compromising our freedoms. They believe good rules and protections can make this possible. On the other hand, skeptics worry that centralized digital currencies might harm privacy and freedom. They fear that governments could use them to control people politically or economically, creating a digital dictatorship. So, what's the likely middle ground? Many predict a hybrid financial system where CBDCs coexist with cryptocurrencies and physical cash, at least for the foreseeable future. This balance will give people more choices, while maintaining some of the freedoms associated with traditional cash. In any case, the rise of CBDCs is not a question of if but when. The real challenge will be making sure they work for everyone, and don't just increase power for a select few. But while governments and lawmakers are fighting about the adoption of digital currencies, the real estate market is going through a revolution of its own. Some people are buying houses with a single click on their smartphone, while others are taking crypto mortgages to own their home on the blockchain. If you want to find out more, watch this piece on the real estate revolution. Thanks for watching, guys, and stay informed.